This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's crude oil imports in March rebounded sharply from the previous 2 months and were up nearly 5% from a year earlier. Data showed on Monday, boosted by a surge in Iranian oil and a rebound in Russian oil deliveries. March imports totaled 51.41 million metric tons, according to the General Administration of Customs, equivalent to 12.1 million barrels per day, the highest since August 2023, according to Reuters records of customs data. That is up from 11.55 million barrels of oil per day in March 2024 and 10.38 million barrels of oil per day for the January to February period.
Oil prices rose more than 1% on Monday after U.S. exclusions on some tariffs and Chinese data showing a sharp rebound in crude imports in March, but gains were capped by concerns that the trade war between the United States and China could weaken global economic growth and dent fuel demand. Brent crude futures rose by 83 cents, or 1.3%, to $65.59 a barrel by 1200 GMT. U.S. West Texas Intermediate crude was up 84 cents, or 1.4%, at $62.34. The news about the exemptions on tariffs has helped lift sentiment across markets, said Harry Chillingworth, global head of research at Onyx Capital Group. But there is still a lot of fragility. You have policy risk around this erratic approach to trade that continues to weigh on markets.
Moving on to the top news in the energy sector.
OPEC cut its 2025 global oil demand growth forecast on Monday, citing the impact of data received for the first quarter and trade tariffs announced by the U.S., and also reduced its global economic growth forecasts for this year and next. The Organization of the Petroleum Exporting Countries, in a monthly report, said world oil demand will rise by 1.30 million barrels per day, BPD, in 2025, down 150,000 barrels of oil per day from last month's forecast. OPEC also lowered its forecasts for world economic growth this year and next.
China's coal imports fell 6% in March, hurt by high inventories at ports and weak domestic demand that have pushed spot prices down to 4-year lows. Imports for the month were 38.73 million metric tons, down from 41.38 million tons in March 2024, according to the General Administration of Customs. That was the first monthly year-on-year decline for coal imports since March 2022, outside of the January to February period, when year-on-year comparisons are affected by the Lunar New Year holiday. China's domestic price for medium-grade coal with a heat value of 5,500 kilocalories per kilogram was 676 yuan, $92.70, per metric ton on April 11, the lowest since March 2021, according to the Bohai Rim Bay Thermal Coal Price Index. Next, we have the top news in metal markets. U.S. President Donald Trump on Sunday said he doesn't think a foreign company should control U.S. steel, repeating comments made last week that dimmed hopes for the $15 billion bid by Japan's Nippon Steel to buy the U.S. firm. Trump said on Wednesday he did not want to see U.S. Steel go to Japan, sending its shares down 7%. The two companies later said they were working closely with the Trump administration to secure a significant investment. Trump spoke with reporters aboard Air Force One as he returned to Washington from his estate in Florida.
China's iron ore imports in March fell slightly from the prior month to a 20-month low, defying analysts' expectations that monthly shipments would pick up as weather-induced supply disruptions eased. The world's largest iron ore consumer brought in 93.97 million metric tons of the key steelmaking ingredient last month, the lowest since July 2023, according to the data. That was down 0.25% from 94.21 million tons imported in February when cyclones in major supplier Australia disrupted supply, and down 6.7% from 100.72 million tons in the same month in 2024. The March volume was also well below analyst forecasts of more than 100 million tons.
We will now look at the top news in the agricultural sector.
Russian wheat export prices were down slightly last week as weather for the new crop improved, but conditions remained volatile, analysts said. The price for Russian wheat with 12.5% protein content for free onboard (FOB) delivery in May was down $1 to $250 a metric ton compared to the previous week, said Dmitry Rilko, head of the IKAR consultancy. The Sovcon consultancy estimated prices for Russian wheat with the same protein content at between $250 and $253 a ton FOB, compared to $250 to $254 last week.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.